Well, with that, without any further ado, we have some amazing, amazing individuals who are learned, who are pioneers and trailblazers in their own right. So I would like to introduce the panel discussion that we are going to be talking about. Now, in today's hyper-connected world, money should move as easily as messages, right? So, and that's exactly what this conversation that we're about to have here is going to explore, where we're going to explore how technology and collaboration are transforming cross-border finance. So let us bring it in and welcome. This is the first panel of the day. Let's have an energy as high as possible. With a huge round of applause, let us welcome our moderator for the session, Mr. Dennis Owusu-Sem, Chief Operating Officer this week in Fintech. Let us give it up. I just said the energies need to be high. Thank you so much for that. A very warm welcome to you, Owusu. Along with that, let me, with a huge round of applause, welcome our esteemed speakers. First up, may I invite Mr. Kiran Shetty, CEO and Regional Head, SWIFT India. Hope you're having a good day. Welcome on stage. Thank you. Up next, let's give it up for Ms. Mridula Iyer, Managing Director, Citi. Oh, that's some welcome. Let's extend it to everybody on the panel. I appreciate it. Thank you so much. Let's do it also now for Mr. Sanjay Tripathy, co-founder and CEO, BRISKPE. Wow! Well, now that's the spirit, right? That's the fintech family we've been talking about. And last but not the least, I think this has to be at the top, Mr. Venkat Bhargav Sreedhara, Financial Sector Specialist, World Bank. Okay, ladies and gentlemen, this is our esteemed panel here. And Dennis, I leave the strings of the conversation in your able hands. Look forward to some interesting conversations.
Perfect. Thank you, everybody, and thank you for the energy. Love it this morning. My first time in India, first time in Mumbai, first time at GFF, and I'm very excited to be here. I know that we have Prime Minister Modi and Prime Minister Keir Starmer here today, so obviously this is just the warm-up act to what is going to be a fantastic day filled with amazing conversations at Global Fintech Fest. For those of you who don't know who I am, my name is Dennis Owusu-Sem. I am the Chief Operating Officer for This Week in Fintech. We are the world's largest fintech publication with over 210,000 global readers. We've had events and conferences across the world, 5 conferences, 75,000 different people, and our goal is to bring the global fintech community together. We do that by highlighting the key players, people who are bringing the edge of fintech and finance to the fore, and we do that by highlighting them. Now, today's session actually sits at the intersection of this. We're very lucky to have this panel of esteemed panelists here that sit across global finance, development finance, infrastructure, and financial innovation. So before we get into this, I know we're probably familiar with the speakers, but please, would love to give you 30 seconds to explain who you are, your background, and your relevance to this topic. And when I say 30 seconds, please, 30 seconds, not War and Peace or This Is My Life. I just want to keep it nice and short. So let's start from the very end, actually, Venkat, and work your way down.
Sure. Thanks, Dennis. Hi, good morning, everyone. My name is Venkat. I'm a financial sector specialist with the World Bank. The World Bank, as some of you know, is a multilateral development bank. So what we do is we help develop payment systems, policy, regulation, but also infrastructure across emerging markets. Our focus is always emerging markets, and what we do essentially is both lending operations as well as technical assistance to grow the global payment system ecosystem. So looking forward to the discussion. Thanks.
Hi, I'm Sanjay Tripathy, co-founder and CEO of BRISKPE. BRISKPE is one of the youngest cross-border payments fintech startup. We started in 2023. Our aim is to revolutionize cross-border payments for MSMEs, exporters, importers, platforms. For India, made in India, built for India, and one day we will aspire to become as big as PayPal in the world and made in fully in India and selling all over the world. Thank you.
Hi, morning everyone. My name is Mridula Iyer. I'm part of Citibank. I'm based out of Singapore. I manage the services unit for Citi, and services for us is everything to do with transaction banking, transactional flows. Very happy to be here, and my remit covers not just the India subcontinent, but the exciting ASEAN market as well. So once again, thank you, and very happy to be here.
Good morning, ladies and gentlemen. It's a real privilege for me to be here. Like Sanjay said, he's the youngest fintech. We are the oldest fintech in the world, started in 1973. I come with about 2.5 decades of banking, financial services, and financial inclusion experience. Swift is a not-for-profit company. It's a cooperative operating in 212 countries and territories. Every third day, we carry the world GDP on our platform. So that's what we are.
Fantastic. Now that we've set the stage, let's look at the big picture. We often look at borderless finance as this vision, the concept that money should flow as smoothly as water, as smoothly as information does online. Venkat and Mridula, from your vantage points in development finance and global banking, what's one current initiative or solution that best reflects the future in action? Let's hand over to Venkat to start with.
Sure. Thanks, Dennis. So again, I wanted to just sort of set the context when we talk about what are the initiatives that we see for the future. Before that, the one thing I want to emphasize, again, this comes again from the perspective of emerging markets, is that the foundation for any good borderless global regional initiative is always an efficient domestic payment system. That's always the first building block, and that's the perspective, that's how we see it, right? So when you look at what's been happening across the globe, there's been a bunch of stuff. You have about 70 emerging markets that have a domestic fast payment system. However, I mean, while that's good, I mean, that's a large number. If you actually look at how these payment systems are functioning, only about 20 of them have actually enabled all features. For example, only 20 of them have done merchant payments. 50 of them don't even have merchant payments, right? So that's the context that you're operating in today, and that's the context that I wanted to set here. If you look at the KPIs for the CPMI, FSB, cross-border task force and what it aims to do, year on year, we see that we still are not where we are supposed to be. We're still a little bit far behind, right? So this is the context that we're operating in. And so to answer the question that Dennis said, what's one initiative that seems really exciting? I mean, there's a lot of good regional work that's happening. I mean, Buna in Africa is an excellent example of regional integration that's happening. But also, if you look at a little bit more broadly, two exciting initiatives that seem to be happening. One is Project Nexus, which I'm sure many of you would have already heard of. India, Thailand, Singapore are in fact part of Project Nexus, and that aims to cut the need for multiple bilateral nodes and bilateral agreements between countries. But also, what's also interesting is the area of tokenization, and what Project Agora is trying to do is trying to leverage the whole tokenization and CBDC aspect of it to see if you can make borderless payments seamless that way, right? So this is just to set the context of what's been happening and what I feel is interesting. I mean, Nexus and Agora for sure, but also a good set of regional initiatives. Buna in Africa is an excellent example. Are some areas which are really sort of coming to the fore. So, but let me stop here and we can delve deeper as we go along.
Mridula.
Yeah, let me just add on to that. I think borderless finance, Dennis, is really the promised land that all of us want to get to. And even if you listen to the conversations that has been happening at GFF for the last 2 days, everything is really focused on how do you get to a financial system infrastructure which is seamless, borderless, scalable, inclusive. That seems like asking for a lot, but essentially I think all of us are working on a path which will get us there. Just from my vantage point and being associated with Citi, which is a global banking organization, I think there are a couple of initiatives or trends that we are seeing, which is really putting us in the direction wherein all of us are moving towards borderless finance. One I would say is definitely the advent of fintechs. They have been around for a couple of years now, but they have made some immensely valuable contribution to the way cross-border trade, commerce, and payments is happening now. Not just have they focused on cost and other efficiencies, but I think they've really focused on experience, which previously I don't think was there when we looked at cross-border payments. So fintechs definitely. Second, I would say we are seeing a lot of financial market infrastructure linkages that is again propelling borderless finance. More recent, closer to home UPI being linked with Pay Now in Singapore is one such initiative where FMIs are trying to connect the clearing systems so that you can do cross-border settlement seamlessly. UPI is also exploring to do this with a couple of other countries. Similarly, Pay Now is connected with Do It Now in Malaysia. Pay Now is connected with Prompt Pay in Thailand. So we are seeing these examples also come through where FMIs are connecting with each other. And I think the third trend that we are seeing is CBDCs, where central banks are trying to explore whether they can use CBDC as a way to do cross-border settlement, make it more seamless and efficient. So these are a couple of initiatives that we are seeing. You spoke about Project Nexus, which again is happening in our part of the world. All the ASEAN markets are part of that. Some of these come with scalability. They of course come with a lot of trust because they are either run by the central bank or by government regulated entities. So this is one trend that we are seeing and an initiative. Just from a Citi vantage point, I would like to add that we are following all these trends very closely. One of our contribution towards moving towards borderless finance is Citi Token Services, wherein we have used tokens, deposit tokens and smart contracts embedded into our extensive network across countries. And using Citi Token Services, we are helping our clients move payments and liquidity seamlessly across the Citi branch network. So Dennis, overall, I would say that multiple initiatives are happening. A lot of this needs to come together, still very early stages, but what I'm optimistic about is that everything is moving in the right direction. So hopefully we should get there soon.
Fantastic. From touching on the future, let's go to the OG of fintech. And I know that SWIFT has long been in control of cross-border infrastructure since the 70s. Kiran, what innovations or models are you prioritizing to reduce the friction and bring the cost of payments down to zero?
So as far as SWIFT is concerned, you need to realize that we are just the rail track on which information flows between banks. And they are the ones that control the pricing and the speed and everything else. But there's one important point here. The information from point A to point B, we are able to get to the bank within an hour, right? But please understand that every country has different regulations, different statuses. So they have different policies around currency control. All of these take time. So you will see one country crediting the payment that they've received within less than 1 hour, and you will see another country with exchange control taking a longer period of time. So what we have done is, very recently, we had a flagship event called Cybers in Frankfurt, and we made an announcement, a very significant step, because like I said, we control in our platform world GDP worth of remittances every third day across 212 countries. So what we did is that we went to like-minded banks that want to speed up transactions. And we have now created a group that will sit in about 32 banks, discussing what are the steps and processes they can take in respective corridor pairs. So it could be India, UAE, or UAE, UK, and so on and so forth, right? And try to see what are processes that we can improve to shrink the timeline. So that's one thing that we've announced. The discussions on this will start somewhere in mid-October, and we're very hopeful that by December, we'd write down some clear mandates within this grouping of corridors to drive faster payments, frictionless payments, and trying to realize the vision of making it like a message as money moves. That's on our platform. But when we go away to innovations like most of my friends here on the panel mentioned, we are a cooperative and we want to interoperate and make banks more efficient. And in that direction, we are looking at making world a standardized place. So just imagine if you travel and you have to change your adapters for charging your phone, that takes time and pain, right? So we are moving away from our own proprietary standards to ISO, and we are pushing the world to adapt or adopt a global standard. So in that world, when you have Agora or you have Nexus or any other initiative, we will be able to interoperate from this system into the other system in the world. right? That's one. The second thing that we are doing is we are also trying to create a ledger-based DLT-based technology, again was announced on 29 September, which will enable, if a country like India is on CBDC and US is on a stable coin, we will be able to interoperate these currencies such that world is able to realize this vision of money moving freely. So I'll summarize in 2 points. Within our platform, we are trying to push the community to have a faster SLA. We are able to deliver information and financial messages in less than an hour, and we want that standard. And in the second world, we are pushing for standardization and pushing for interoperability, given our presence in 212 countries and our cooperative nature.
Interesting you mentioned about being in 212 countries. I'm going to throw this back now to Citi, because I know they operate in 90-plus markets. So Mridula, what are the biggest challenges that you face in integrating new digital rails at scale? And how are you navigating the regulatory discussions that are taking place as you modernize global banking infrastructure?
Yeah, you're right. We operate in 94 countries, Dennis, and therefore, this has been one of the biggest challenges in the last couple of years. And as Venkat mentioned, every country has been trying to modernize their domestic payment schemes. And that means that banks like us have to keep up with the infrastructure that is happening in the country. Every country typically has at least 4 to 5 payment schemes for high value, low value, instant payment. Globally, we are connected to almost 350 clearing schemes. So you can imagine the amount of upkeep that is required. But a couple of things I would say is that we started adopting this approach a couple of years ago, wherein we went on a platform modernization journey, wherein we now are in a process where we are building a global infrastructure which is consistent and can be rolled out in every country with a little bit of tweaks to meet the nuances of the domestic market. Same time in GFF last year, we launched our Payment Express, which is one such platform, which is our cloud-native platform, which is very suited for instant payment in every country with very high TPS capabilities, etc. So that is one approach that we are taking. You build a globally consistent platform, and then you deploy it in every country. And to Kiran's point, another change which is happening domestically is that the payment standards are also becoming quite consistent. Most countries are now moving to the new ISO standards, so that is helping, because then it just helps us reverse engineer the platform in such a way that you can deploy consistent infrastructure in every country. Likewise on regulations, right? When you look at regulations in every country, you may feel that every regulator is in a different journey, so they are coming out with a regulation which seem ad hoc. Again, a couple of years, we rolled out a platform which ensures that regulatory change management in every country is captured in a very consistent manner and is actioned upon for compliance. And Dennis, you'd be surprised when you just take a view of what is happening across countries, the regulators are not so different in their approach. They are very focused on a couple of things. They want consumer protection, fraud, cost, transparency, better pricing for consumers. So these are the principles on which regulators are operating. And then when you put everything into one platform and when you look at it, you'll realize that there are these patterns on what regulators want. And that then has helped us build those principles and approaches into every product and solution that we roll out. So last few years have been very interesting for Citi, Dennis. We have been on this journey to modernize our platform, to ensure that we comply with regulations in each of the 94 countries that we operate in a timely manner, but at the same time, we also stay relevant to the local infrastructure in every country and to the local stakeholders in every country.
Very interesting. I'm going to bring Sanjay into the conversation in a second, but you touched on something around fragmented markets today. Venkat, when it comes to the World Bank's perspective, what specific execution steps, whether it be policy or infrastructure or partnerships, are most critical in bridging that gap over the next, say, 3 to 5 years?
Sure. So, I mean, the short answer to that, Dennis, is that it's all of them. I mean, it doesn't work if you don't do all of them. You need regulation, you need partnerships, you need all of that. So, I mean, just to give you an example, for example, one of the areas that the World Bank works in is the Pacific Island countries, right? Again, these are tiny countries. And the issue there has been loss of correspondent banking relationships because of AML CFT issues. I mean, no banks are de-risking. They don't want to touch that market because they find that the banks there and the regulators there aren't really up to par when it comes to implementation of AML CFT, for example. So how do you help countries like that? So the point that I'm trying to make is the challenges are varied across countries and regions. There are, of course, high capacity regions. I mean, one of them we're sitting in right now, but there are also regions with maybe different levels of capacity. And when you talk about cross-border finance, you need capacity on both sides. That's the point. You can't have one strong node and one weak node. It doesn't work that way. So, I mean, when you say what is it that you need to do, you need to do a mix of a few things, right? So, I mean, I can maybe talk about this a little bit more through an example. I mean, one of the sort of flagship projects or the flagship initiatives that the World Bank is now doing is this initiative called FAST. FAST is the Frictionless, Affordable, Safely, Timely Transactions project, where the World Bank is now committed to helping 30 country or regional bodies over the next 5 years modernize and sort of bring their fast payment systems up to speed and also connect wherever possible, right? So what are we doing there? One is modernizing financial infrastructure, and this is something that's important, right? You need to be able to have, Kiran talked about the rails need to work well. That's one. The second big part that we really help countries on is laws and regulations. So this is having something as simple as a Payment Settlement Act or a legislation, which a lot of countries don't have. And this could be things like implementing how do you get through an FATF inspection, for example, if FATF mutual evaluation, for example, how do you do AML CFT? How do you have competition in your markets? How do you make sure that you have sufficient players, good models? That's something that's important, right? So, and to sort of bring all of this together, we also work at the global level with like-minded development partners like the FSB and the G20 to work on something we call a cross-border payments roadmap, right? So, but I just also want to go back to something that our wonderful master of ceremonies was saying right at the beginning. We're talking about the soul of finance, right? The inclusion aspect. And this is what, at least for us at the World Bank, is super, super important. We don't look at cross-border payments in isolation. It's a means to an end. The end here is leveraging existing economic integration. The end here is financial inclusion, promoting digital economy, and this is what we're trying to serve. So that's the idea. How do you use some of these technologies, some of these initiatives to bring about that change, right? So that's so what I'm trying to say here is that it's a bouquet. It's a mix of all these things. It's infrastructure, it's laws, it's regulation. Oftentimes, it's also capacity building, and that's something that really gets left out a lot of the times. A lot of central banks, a lot of supervisors, and in fact, market players need a lot of hand-holding, and that's, again, something that we do. The last point that I'll talk about on what's needed is also sort of a future orientation, right? So this is where some of the more innovative stuff that's going on in the market, whether that's Nexus, whether that's Agora, so we need countries to come together and be willing to work on some of these initiatives. I mean, we have excellent participation in Nexus, which is in the region, which is great, but we need more of that. We need more forward-looking thinking. We need more countries to be willing to come and work together with the help of, development partners and others to bring about some of this change. But let me stop here.
Perfect. Let's pivot slightly from development finance to fintechs and look at financial inclusion. Obviously, fintechs and development banks share the goal of financial inclusion, but scaling across borders brings about compliance and trust hurdles. Sanjay, what practical execution challenges have you faced along the way, and how exactly have you worked through them?
Well, I quite like the conversation. The places for fintech like us will not exist if SWIFT and all the banks would have done the work the way it is intended to be. I think the fintech exists because of the friction in the ecosystem. Friction is not just about the payment flow, and I liked quite Kiran's talk. We are working with few banks, few corridors, few projects, few things, but when we think it will reach the global audience, global poor, what I said, the other side of the pyramid like MSMEs and the smaller guys. So that is where we exist, because banks traditionally always supported the bigger guys. They look at big tickets. They looked at, for example, today as a fintech, if I go to onboard in Citi, probably it will take more than a year. A year will be shortest time I can get myself onboarded because I'm small, right? So what happens, banks traditionally didn't look at the friction, what the MSME and the small guys are facing. Friction is not just about payment flow, that most of the people anyway solve. If you look at things around it, one is compliance. First, let me start with KYC. KYC, KYB, compliance, and then documentation, then the settlement. See, today, yes, cost is high. Cost is, if you look at the bottom of the pyramid, it's significantly high. When we actually studied with 500 plus exporter before we started, we looked at, the cost varies, few bips per a, or 0 bips, almost 0 to 2 bips for a largest guy, to 8% for the smallest guy. So that's the spread which is available. During my childhood, I used to do money order for my, take money from my parents to stem to my grandfather. It used to be 3%. Today, UPI is 0. So I believe the spread will go. So that is on the cost part of it. Then time taken. So UPI is real-time instant. So one day it will become instant. But are all these projects over the last 50 years, the global top banks are really able to solve it any quickly? So far, no. But the fintech, that is where the fintechs come in. As you rightly said, how to bring inclusion, it not just on the cost, but on the speed and more about accessibility. The question is when it is the multiple correspondent banks involved, and look at a MSME, I'll take at a small town, so we can, like Azamgarh or Jodhpur or Jaipur, a small guy is sitting, his money is probably come through multiple correspondent bank to reach him. He may not be having even an account in a Citi or a HDFC bank per se. He'll be in a PSU bank or a small finance bank. So by the time the money reaches, he has got no clue when the money is coming, how much charges has been cut, then he has a documentation is completely manual because every branch has a different experience at the end of the day. The experience is not standardized. So I think Mridula talked about how fintechs are bringing out the common experience part of it. The more importantly, like the compliance, the post-payment compliance is the biggest part. Then he has to get the FIRA on time. Then he get to go to the EDPMS updation. Then he has to do DGFT portal. So there are a lot of things he has to do to ensure that the export payment has been realized part of it. I think the way the fintechs are working today, I think the best way to really what we are thinking, how we want to really revolutionize the pace is that look at the challenges what they're facing. It is not just a payment flow, payment compliance. How we'll do a compliance faster? Like obviously but we believe that we are almost like a 3.0 kind of company. So can I use AI ML in a better way to do do compliance on the go kind of thing, so that it is not really stopped. Can I get the information on time so that the money can be processed faster? And how can I use alternate rails what all of us are using something like a virtual account. So I'll not talk about the other ones what CBDCs and other blockchains which are coming. But what is expected in the market is a real-time payment. It is expected is not few corridor payment, few currency pair kind of payment. People are expecting his money should be settled on time, so that whether he's sitting in Jaipur or a Kochi, or he's sitting in a very small town in Africa, he should get the payment as quickly as a domestic payment. That's the expectation today. And today that expectation is not met by any of the current financial institutions. So that's the opportunity. The second thing what fintechs would like, I think they're doing a great job in terms of, as I said, compliance and documentation. See, compliance is a large piece to solve, but if you get the information in time and you ensure that, when the document, whatever the goods, if the goods or services, you collect all the possible information beforehand, so that if there is any query comes in, you can push the information so that money is getting cleared. That will be really, really good. I quite like what Swift is actually doing in terms of things. But I want that, rather than working with few banks, they should work with all the banks and make it quick. Like ISO standards, we're listening, till the day I have started this startup, I am hearing about ISO standard. Still, it is not used by all the banks so far. So I think the adaptation of the standards is much more key, rather than, building on a fewer things. And the space is pretty slow in terms of what you're building. So inclusion is not just about understanding the problem. Inclusion is about solving the problem. Like if you look at what UPI has, what a great public-private partnership has done, I think we need much more public-private partnership in cross-border payments to bring UPI kind of rails to settle this. And that is where we want to take our, let's say, we are a licensed PSCB player. We want to still PSCB as a service or technology as a service to all the smaller banks. and provide us a platform where it is less dependent, obviously it has to go through SWIFT, but is less dependent on SWIFT, more dependent on model rails, so that settlement is faster, information flow is faster, compliance is faster, and more importantly, the settlement documentation and the compliance at the trade level also becomes faster.
Thank you. You touched on something around friction points and inclusion, so I'd love to get into that a little bit more while we have just over 10 minutes remaining. Kiran and Mridula, what specific choices, whether that be product design or partnerships or ecosystem structure, can help ensure that that inclusion is actually built in from day one? Kiran.
You know, and I think Sanjay made some great comments before I come to your question. You know, and what I want to say is that at the end of the day, remittance has a cost. And the moment you have more and more innovations happening that are not coordinated, you increase the cost. So if you look at Agora or other projects that we spoke about, if each one of them go and talk about creating a connectivity with a bank across multiple geographies and zones, that takes the cost of the business. That's against the purpose of bringing the cost down, right? So as a bank, and I strongly believe that our banks are very, very robust, are very, very keen to drive processes. But please understand that banks have very heavy compliances to meet, right? And their licenses get fined heavily if they breach anything, right? Whereas when you have startups, they come with lightweight footprint, they make mistakes, and they can get away with things, right? So for those reasons, we have always believed in responsible innovation. And that's why Swift will always start with smaller paradigm and move to larger ecosystems and create a solution that's not something that strike and win. It's not like one more island of a project opened and leave it open, right? We would want to conclude those projects. So for us, as a cooperative, as a responsible innovation, as a company that's owned by all the banks, we will pursue the agenda in a manner where costs don't go up for the bank, where with the same technology, they can do multiple different connectivities and move the order. And for us, when you look at money, it's not a commodity. It's not a message in an ideal context. It's about trust. And that trust is paramount. And when you cross geographies, like I said in my opening comments, you have different regulations that apply in different countries. I think the effort should be also on that level. And ISO journey has taken us about 5 years because we went across 212 countries to move from our own proprietary standard to open standard, right? And that's the idea. We should all get to common standards in terms of regulation. We should all get to common standards of data exchanges such that the cost goes down for the community, customer benefits, and speed increases. So that's the comment. Now let me come to your question. What was the question again?
The question is talking about product design and partnerships and ecosystems. Like, how can we ensure that inclusion is there from day one?
I think the whole idea is of inclusiveness, and I think that's at the ethos of who we are, right? We believe in community engagement. So I'd not just sit with Citi. I would sit with 500 banks together to say how should we exchange information. And I would expect that similar things happen at various institution levels, and that kind of moves the needle forward. And institutions like us should not be used by political layer for sanctions. These are public utility, good institutions built for a certain purpose. And you should keep them away from any of these political decisions and continue to let them operate for what they're built for. Right? So I think that's my view on that point.
Perfect. Mridula, do you want to add to that?
So I'm also going to add something before I answer your question, Dennis, because I think Sanjay has raised some very valid points, and I've been in the space for a very long time, so I've seen this journey and this development. We all want things to be done a lot faster, but you know, when we did the first GFF couple of years ago, there were so many sessions on bank or fintech. Is our fintechs going to eat the lunch of the banks and things like that? I don't think we discuss that anymore, right? Because I guess we've now realized that the two are complementary, each come with its own strength. I have admired a lot of fintechs who are able to do, which as a bank I'll never be able to do. But I think we come with a lot of trust. We were very responsible on regulation, and that is where we are advising a lot of fintechs who are working with Citi on regulatory challenges or capabilities or opportunities in every country as they are expanding. So yeah, we all want things to move at a much faster pace. And I think things are moving at a much faster pace now than maybe, say, 7, 8 years ago. But yeah, it has to be done responsibly. And I do remember your question, Dennis, so I'm just going to answer right away. So just when we talk about financial inclusion, I think that is a very big part of how a financial infrastructure should be built in several countries. And I think India is a great example of how successfully we've managed to do that, right? When I just think about how an inclusive financial infrastructure should be built, I think there are 3 or 4 pillars that I would say. Maybe A, B, C, D for us to remember very easily. Access, basic products, cost efficient, and digital infrastructure. So what do we mean? And I think when you look at the India example, each of these pillars have been used very effectively to come to where we are now, where the world is really looking at India. And as I said, I have ASEAN coverage and I travel to those countries and I meet the regulators in the country. Your first question to me is, tell me about UPI, tell me about Aadhaar, tell me about Jan Dhan, tell me about how you guys built this digital infrastructure. So I would say that the foundation of a good, inclusive financial infrastructure is that access. It should be accessible to a wide range of people. In India, while payment infrastructure has been built for smartphones, it has also been built for feature phones. You have AEPS, you can do using biometrics, Aadhaar. There are various channels which are suitable for the different kind of audience in the country. Basic products. Jan Dhan was a great example of basic no-frills banking, which got a lot more people into the banking channel. Cost efficient, and that is where I think our fintech partners come in, because they have now figured out ways to make payments a lot more cost effective, right? And digital infrastructure. All of this, if you want to achieve it, has to be built on a strong digital infrastructure, which is robust, scalable, and can have trust because it is fraud-prone, cybersecurity, and all those good elements. Very great examples in the world. I think India, of course, but Kenya, M-Pesa is another infrastructure which has been built on financial inclusion. I am also seeing some examples in Philippines. Philippines, the biggest remittance into the country comes from offshore workers who are working overseas. And that is where, Sanjay, I think you alluded to private-public partnership, where wallets like GCash have enabled an ecosystem which makes it very easy for the foreign workers to send money back home. So multiple examples as we are seeing in the world, Dennis, but I think you can build an inclusive financial infrastructure if you take care of these elements.
Perfect. I want to touch on the public-private aspects with Sanjay a bit. And so standards and interoperability often sit between private innovation and public coordination. In your view, who should lead the regulatory conversations? Is it regulators, or is it consortiums, or is it market players? And how do we avoid the deepening fragmentation as we continue to develop the new solutions in the market?
Well, again, before I answer, this is the point which I agree. Agree with Kiran and Mridula, because see, look, nobody can build this rail alone. Okay, we need each one of us. But this is my common thing. As you go older, you know what is your strength and what are your weaknesses. Today, bank and SWIFT should know what are the strengths and weaknesses and where the fintech strengths are. We know fintechs are very good in terms of giving a customer experience, ensuring putting the digital rails faster, ensuring with the end-to-end KYC. Say I can do when we launched, we can do a 5 minutes KYC, entire thing entirely on digital. Onboarding is digital, where we get giving 5, 6 virtual accounts in different currencies. Onboarding, but as a corporate, when I onboard in any of the commercial bank, my onboarding takes more than 21 days. 21 days is probably the fastest. My accounts guy is here, so he'll say, that maina laga karke. So what I want to say that, the co-creation is really good, but we should understand our strengths. And coming back to your point, it is not that one player will lead it or a consortium will lead it. I think what we need to understand where our roles are. And, can we create an open AI infrastructure kind of thing, where different players can really plug into that depending on the need, like UPI is a very good ecosystem. Can we create something like a cross-border payment? So depending on the currency, be it fiat or be it blockchain-based CBDC or something, we can use that infrastructure. See, for example, a payment can only become faster when you get all the compliance information, documentation, everything flowing with the payment, right? Or else there'll be multiple queries and multiple nodes which will get asked. So can we really make sure there is a one common network where the information is fed so that, that node is actually robust? And it is not that we need regulators, right? It is like regulators a lighthouse, you need to operate in a manner, but can the regulatory framework across the world will be slightly, as I like the word basic, is a basic common standard should be same across, unless it's a complex transaction everybody should go through. Can we really have the same access of that infra to all the banks, all the fintechs together so that we can do it? So as a fintech, I can try that, whatever I got, I can actually, that's what we are trying now. There are a lot of small banks, I'm trying to offer my infrastructure and trying to say that, look, you don't have to build all this thing we have built. You can do your settlement on your own if you've got the 81 license. But, you can use my infrastructure for customer onboarding, a digital KYC, compliance thing. But this is huge place in terms of building it together. And regulator needs to work all of us together and, in a manner so that like UPI was, India is one of the leader in the space. India has potential to be a leader with the CBDC world, with that putting a right framework in place. I think it is not one person win it all. Everybody has to work together. And more importantly, everybody should understand what is the strength. For example, we need banking infrastructure, backend infrastructure. We need a secured system, right? For a fintech operates because both sides there is bank. It is not that fintech actually moves the money. So it is important to all of us to play that role together and help each other to make that system better for the customer.
Fantastic. I know we're about to wrap up, and so on that touch of a collegiate response, I'm going to have one more question, which I would love to get a hot take from everybody on this panel. Imagine it's the year 2030, and we're all reconvening here at GFF. What single milestone, whether it be instant remittances or digital IDs or something completely different, would tell you that we've truly achieved a borderless, scalable, inclusive financial system? I will start with Kiran for your thoughts.
Yeah. I'll first agree with Sanjay on his comments. And then in terms of your question, there's a G20 agenda in terms of remittances, speed, and cost, right? The G20 has articulated that 75% of the transactions should get credited within the same day. And that's the 2027 target, right? And the fee of remittances should be below 5%, which still in my mind is very expensive. So I'm hoping that by 2027, most parts of the world would be able to get there. We are making some concrete progress with the regulators to change some of the market practices and the approaches in which remittances are being passed on. So for me, faster remittances, cheaper remittances, and transparent remittances are themes that we'll work with, and we'll work with multiple institutions to make that happen.
Mridula.
Taking on from there, it's exactly the same. I guess it is how institutions can come together to create that interoperable framework, which can ensure that there is faster cross-border remittance. And Dennis, as you know, most countries are now way ahead in their domestic instant payment infrastructure. So can you imagine you would have a connectivity which is instant cross-border remittance and then instant settlement locally through the instant payment rails in the country. So that's the kind of future that I'm sort of expecting as we get to 2030.
Perfect. Sanjay.
I'll put it slightly different perspective from a customer perspective. Rather than we talking what we will want to see, I would like to see that customers should get, he's pushing a payment of dollars, he should get it instantly. Whatever complaints need to be auto done, and his documentation be instantly done, so that he doesn't have to really wait for 9 months to get the papers and go to the bank and try to onboard. So getting payment to documentation should done instantly, so that he doesn't have to really bother about it. And second, I want that there should not be compliance checks should be automated. And it should not be. It should be seamless. He should feel that there is actually check happening or it's getting stuck. Currency rate should be instant. The last is that, people like us should be able to onboard in any large financial institution in a week's time, not in a year's time. So.
Perfect. And finally, Venkat.
So 3 quick points for me. One, continued strengthening of domestic systems, right? They're doing great, but one point that we need to still remember is even today, 50% of adults in emerging markets don't make digital payments. So that's the first gap we need to bridge. Second, echoing what Kiran said, you have D20 targets on cost and speed of remittances. If you can achieve that, I think that's the milestone. And the third point is product innovation. So can you bring about things or popularize things like export invoice financing, for example, some of the things that are coming up now. If you can keep up that innovation in terms of product design, that's something that will be super important as we hit 2030.
Perfect. Well, thank you to our esteemed panelists for your quality insights. Thank you to the audience for your time today, and look forward to a wonderful day of discussions at Global Fintech Festival. So thank you all.